learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming into June 3rd, 2020, and the stock market is slowing down in many ways. Well, price-wise, it's going up, but don't forget, it is summer, and trading volume has been going down, but also the news and developments and what we're looking at, what is keeping the market up when we're getting these little spikes in between, what is happening, how is it developing, all of that is slowing down, and I can't wait to talk about that with you guys because I have a few updates from China all the way to what's happening here, even everything with the protests and the economic effect, as well as even some more winners and losers in the midst of all of this. So we have a lot to talk about. I have the keys, I have the plays we made today, along with the strategy that we're doing. We even did some covered call sales. We did a lot today, so I hope you guys are ready. There's a lot, but let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, ask questions about the plays, see the watch list come to life live. Oh my gosh. So hopefully we see you there. All we ask is you are positive and respectful, and the most important thing you need to do, post your watches below. Let us know what you're looking at. Post any plays, comments, remixes, anything. We have to source that information, especially when the markets slow down in this way. What are you going to, I can't wait. Winners and losers, winner, winner, winner. We have a lot to talk about. Okay, I'm sorry. But right off the bat, the first thing that is slowing down, and what I mean by this is the news and everything else. A lot of people are even asking, with all these protests, it's day number 8 now, why is the market still going up? Remember from last week, even though we had some of the China stuff and all that, it seems like the consensus, and it makes sense from a pricing standpoint, analysts in Wall Street are looking at the economy reopening and going from a standstill to now businesses operating. And don't forget, there is the rest of the world, and a lot of these companies deal with the rest of the world. Now, you're getting some after-hours moves. There's some talks from the White House about the second wave. Again, we can't forget the virus, but we are focusing on something else. So now, in the grand scope of things, especially with some of the news that came out today, I'm expecting that we're slowing down, setting up for a bazooka of either policy or changes, or kind of waiting till things get worse to kind of actually make more new moves and updates. And one thing I'm getting from that is the Senate Banking Committee, a piece of news today. They want to know what is up with the lending facility. So that came out early today, and we saw kind of a move from it, but then markets bounced up and it was holding up. But it seems like even with the sanctions, all that, they want to stall. But going back to the lending facility, remember, we talked about this a few weeks ago. They jawboned the whole entire lending facility from March. They said, we're going to do this, do this, do this. They said they were going to do it. None of it's rolled out yet. So that is interesting to think about, because maybe they're just waiting till the right time. Maybe it's difficult to set up. Who knows? But that is coming up. And again, with some of the more news now, China did more easing. Now, this news is from yesterday, but I saw this getting circulated, and I dived a little bit more into it, and it makes a lot of sense now with the yuan. China unleashed their own quantitative easing pretty much yesterday, which is when we started seeing the yuan start to strengthen instead of weaken. Actually, they're copying the Fed in the sense of a primary dealer credit facility, because now they're allowing the PBOC, the Chinese central bank, is going to be able to buy unsecured loans from either banks that gave it to businesses or even just in general to whomever they want. Looking at that whole China thing, I think that is related to what's happening both globally with the US and all that. It seems like we want to kind of wait to see what's happening. If we could slow down the news and kind of keep a certain level of calm that is acceptable, we will keep that and stall to kind of release some of the bigger stimulus guns when that second wave of data, or the real set of data of, okay, are we going to recover? What is this recovery going to look like once all that information comes out? But that's what we're kind of seeing, and you're going to see the markets move very, very slow because it is summer. Volumes are dropping. There's not that many people trading, and even then, look at the market. Look at, I don't know, your own schedule. People are getting back to work. You're seeing traffic. You're seeing protesters as well too, but people are going outside, and that is the main thing with money and money moving and stimulus, and do we need this credit facility or not? That is the most important thing, or at least that is what Wall Street is pricing it as the most important. So we will find out very, very soon. And I guess another piece on top of that, and this is for a play I would be looking at, but this is now going to go get passed, or they're taking this to get voted on. But there is a bill for California for commercial leases and allowing them to be renegotiated. And if they can't get to a deal with renegotiating, it will allow the tenants to break the lease. So what I'm saying is watch the REITs now. And again, watch how things are moving slow. Watch even the banks and rotations, because remember that whole bankruptcy and all that, we have yet to see that wave happen. So we need to keep our eye out for that. This is a weird game of musical chairs and hot potato at the same time. Just picture that. Doesn't that sound wild? But if anything, I'm going to be watching the REITs and watching these broader industries, as well as monitoring, what's happening on a day-to-day. But it seems like we're not going to get anything big unless it is going to affect policy, has something to do with the stimulus, or a reaction, positive or negative, towards the recovery or this reopening. And now the next aspect is we could just see a melt up or even just kind of chill out in a range. So I am going to be selling a lot of premium, or that is the strategy I'm going to talk about here with the plays, but I already did some today. And if that does come to life and fruition, that is going to be a good play to look at. But finally, as far as the protest, like we said, it hasn't been priced in, and I say yet because it still can. Again, this is day number 8. We'll see what's happening here, but we will find out after this weekend. So if it goes on throughout this whole week and then carries over into the weekend, and depending on the actions taken, that might tell us something. But if this is something that lasts pretty much more than 2 weeks, 3 weeks, a month, that is when Wall Street will price this in as something that could have a material impact on company performance, reopening, expectations they previously outlined. Or this might be something where if Wall Street totally could brush this off. Don't get it twisted, because what's going to happen, everyone's going to say, well, yeah, we knew there was riots. We knew that was happening. We already thought Corona was bad. They're going to say they priced this in already. So even, this is going to be like a charge off that was kind of expected. So keep that in mind. And then also, we've seen this before. It causes small plays and it could create a awesome buy the dip opportunity. I remember Nike was in the middle of a lot of heat at times, but it could cause little blips to the price. But remember, winners and losers can emerge from anything, so keep an eye out for that. But even with all this political drama, that being said, another piece, and this is leading into the plays, and I'm going to be looking at them tomorrow, is Facebook and Zuckerberg. He is not censoring the president's post, and people are resigning. They're having employee virtual walkouts. I think that just caused signing off, but he is standing with the current policy makers, and they might be a winner, or we're at least going to see how Wall Street starts to take that. But they responded a little bit to that today, but we will see. But that is pretty much it. I hope you guys are ready. I hope you're excited. I hope you balance the budgets. We have a lot to go over, so let us get into the plays. So right off the bat, we have the credit spreads we need to talk about, but I did make long-term plays. I grabbed some AbiVi shares, so we will start with the trades that we made today. We grabbed AbiVi shares on the long account. I grabbed 41 of them at 90.56, so a pretty big position. It helped balance out the bigger portfolio between dividend growth payer and flat out growth. So remember, I want more Snap, but Snap was up. My position was only up 2% to begin with, so I said I'd go with AbiVi. But they also have, I believe, some PDUFA news, and they got some drug updates the other day, so it could be a sell the news event. That's why I bought them before ex-dividend, but we will see. And then I also sold a covered call on them. So if you guys know, we already have 100 shares in this account of AbiVi. Again, big fan. So we own these shares, but we sold a covered call at 100. I collected $208 for that. And then we did the ghetto dividend. So what did I do? You could see now I have 102 shares. So what did we do? We sold the premium, agreeing to sell these 100 shares at $100, higher than the 88 that we bought them at, or 90. It says we bought them at 90. No. Yeah, we got them at 88.92. And then we took that $208 and then we put that right back into the stock. So kind of like a dividend reinvestment, the ghetto dividend. But there was that play. And again, remember, we've had this account before. That's why we were going over it today. But I also sold covered calls on these real rails. Again, we're down on this. The real estate guys love this one back in the day. But I sold 12 contracts. I got back $870. So did some covered calls. Again, this has to do with premium selling, so that's a little bit of an intro into that for you. But as far as even other plays, I sold out of my Zoom contracts. So remember, I got those puts at the beginning of the week. I had 5 of them. We bought them at 40 cents. I sold out 4 of them at 45. Held one. Again, it reported today. It got premium on the put side, so that's why I just sold out. I said I'll keep one. And then the other play that we made today was Tiffany's. So again, some of you might get negative flashbacks when I say that word Tiffany's. Ugh. And ladies, if your man has played Tiffany's before buying you Tiffany's, but go check if he has a long-term portfolio. If he doesn't have a long-term portfolio, he's lying to you. He's wasting his time on here and gambling his money. But seriously. And we played this. So the Tiffany's, we got this one, but there was a report that the deal between them and LV Moet, MH, whatever you want to call them, but that the deal might not go through. And remember, we got burned on this last time. I think it was on the upside, and then remember it got capped out, so we had those old calls, but the deal falls through. This news came out before, but the more it comes out, and this one, it seemed to not be refuted and had more legs. If this drops, it's going to go down. There was crazy premium, so I grabbed a January contract for 60 strike. I paid 110 for it, so a little bit more. It was up to like $200-$300. I think it closed at like 170 on the bid, 190 on the ask, so a little bit higher, but that play could have some volatility, and if they pick up, they could be good, and it might be better to play tomorrow if the option chain evens out and it's not as volatile. So watch out for them. But those are the first two plays we made today. And then finally, the last play, and this is going to go with this strategy, and this is what I'm even going to be looking at tomorrow. We did credit spreads. So I want to do this for Home Depot, but I did this for McDonald's. I mean, it's not really the best risk to reward, but again, it's hard if the market isn't going to move and it's going to be summertime and there's not going to be big dollar moves. These out of the money contracts aren't going to hit. However, at the same time, paying high premium for stuff that still might not hit may not be the best. So if I'm going to take a loss, I might as well put the odds in my favor. This is like a 60% premium. What I did here is I did it with two contracts, shorted the 190 calls for McDonald's on June 19th, and then I bought the 192.50. So I collected a $1.03 credit, but pretty much my max gain is going to be 174. I did two of them. Why is it saying max gain is 174? It should be, my max gain should be $200, and then the max loss should be around, I think, $200 or $300. It's like a pretty equal ratio, but I like the probability on that, and what I want to start doing is aiming for like 2 weeks, 14 days to even 45 days, maybe even the August, but I think that might be too much. But pretty much till summer ends and some economic data, if we're able to confirm kind of a slowdown and we see it, I'm going to start scaling in on some of the premium sells, just like I did with the China plays. You see how those worked against me. I could use that to my favor now. So we will see, but I'm going to try to use this strategy on Home Depot. That's the first one. So we could make like $200 from it, or we're going to lose like $200 or $300 on it. But I want to start setting up some of those. And even with that bigger Robinhood we have, I want to take a lot of this cash, and I'm going to start even selling puts for some of the long-term positions we want to buy. But if I'm not expecting too much volatility in the next month or two, or even if I'm expecting bad stuff, but I'm not expecting it to go absolutely crazy, selling premium is a really, really good way to take advantage of what's happening right now, especially just with even elevated concerns. But if the market volatility does start to pick up, I will ditch that very quickly and return to buying and buying premium, and that's it. I can't spell collateral, but watch out for those. I'm going to be looking to do the same thing tomorrow, but I'm going to start to do puts on HD. So I'm selling call credit spreads for things to go up, but I'm going to pretty much do iron condors, but not on these companies. I'm pretty much going to break it down between companies and industries and do call credit spreads on some, put credit spreads on others. So if one wins, I'll make it on the other, kind of balance it out. And then the best win-win scenario is that if these stocks hold these ranges, and we could win on both sides and walk away with some easy premium sales. Not easy, but at least get paid to not make risky YOLO plays. So I really like that idea. So watch out for that. We got the TIF play. I put LOL just because we got scarred from it. I'm going to watch Zoom for the continuation. So now that we got out of that play, I mean, they've been moving a lot. They moved within that $20 range after earnings. So watch out for them. And then lastly, or actually two different plays, but Spotify and Chewy. Chewy, they're going up, but they're an IPO. And that's the same thing even with Spotify. Spotify went up a little bit faster than I expected, but here's Chewy. They're reaching that high. They don't really move too much, even though this is 100% on the 100-day, but they're breaking out at all-time highs. This could be crazy. You've seen Beyond Meat and all that, and the market likes to get exuberant with some of these, but I like these to trade and flip, or especially for swing trades. So I'm going to be looking at that for the call side. If it continues, a lot of people are like, should I get puts on it? Not quite yet. So usually in these scenarios, the puts are expensive, but you just really never know if it's going to be like, it has to be a really, really crazy drop to make money on the puts, but be cautious. I'm going to be looking for calls though. Puts, I think, at a later time. And remember, like Beyond, there's going to be waves of hitting highs. So always get extra time if you're going to look to swing trade these. I'm using these as a swing. So I'm going to be watching out for Chewy tomorrow. Same thing with Spotify, but I already have that July play on Spotify. Those are holding up. We bought them at 50 cents. They're holding $2 a contract. So we still have two of those and the long-term shares. So I really like that play. And then finally, the last play I'm going to be looking at tomorrow, we still have that 1 September call, but I want to get a little bit more. Where is it? Facebook. So like I said, with that news, they are choosing to stand with Trump. We've been getting, remember we saw that EU thing? Facebook is totally playing like 6ix9ine. They're literally snitching on everybody. They're trying to say, government will do whatever you say. Government, give us rules. Trump, we're not going to censor you. So you could call it whatever you want. You could characterize them, but from a business perspective, I think Wall Street might like that because it looks like they might be aligned with policy, and that could mean something for them. So watch out for that. But those are the main plays. I'm really thinking Chewy on the upside tomorrow, riding out the Spotify's, selling premium, both calls and puts. I know at the very least I'm going to do some credit spreads on HD, and then I'm going to look for Facebook on the call side. Even though we already have some, I might get some short-term and some mid-term ones, but I do want to just see the reaction, and if it does look like it's pretty bullish, I might get some, or if the contracts are really cheap. But there is that. As far as everything else I'm going to be watching, we said Zoom, we got the McDonald's. Again, we did Abivai. I mean, watch UNH. They raised their dividend. They've been moving, but like I said, I wanted them yesterday. I talked about them, but like I said, game of musical chairs. You can see they're holding these highs. If they come down again, premiums get killed. When they do break out, it will be big though. So play with caution. Watch out for that. I'm still not in that. I'm going to be watching Facebook and pay attention. They closed down at 1/18% today. Amazon, I guess they're creeping up a little bit after hours. They made a move, and then I need to see Microsoft. I think, yeah, they actually ended up doing really good into after hours, but a lot of them were lagging today behind the market. So watch out for tech and all of that and how that's played. I'm going to watch that. Watch the chip makers. There's NVIDIA. They did good, and I meant to roll over. So we also have the small account. I forgot about this play. So remember, we had this credit spread. Here's the small account that we got. But we had this credit spread, and I was going to cut out of this play and roll over because there's ex-dividend tomorrow. Now, it looks like the ex-dividend might be only a $16 risk, but usually that sketches me out. I don't like ex-dividend. So understand that if you sell credit spreads and the company has a dividend and the stock is in the money, you are liable to pay the dividend. So I wanted to close out of this contract and roll it over. So what would that mean is I would close out of this contract and then I would reopen a similar position. So let me show you what I'm talking about for some of you, because some of you got to close this out. I wasn't getting filled. You see, I put in a bunch of orders to close out. I left the order all day. I didn't get filled, so I'm still in it. But my plan was to close out of this play and then reopen another spread that was simply just out of the money with the same date. I didn't want to get more time. Usually when you roll over, you get more time. In this case, I just don't want to be liable for the dividend. So what I was going to do instead, I was just going to sell the 355 out of the money. And then NVIDIA, this was even before they ran up at the end of the day, so it was a little closer there. So you could even do this at a different, the goal was to get $2 back. So I would still lose some money, but I was going to sell the 355, buy the 360. And again, I'm saying this now because this could change. If NVIDIA keeps going up, I just don't want to be near the money or in the money by that ex-dividend. But you see it's saying 260 credit. So if I closed mine out at 350 and then I reopen this at 260, I would lose that $100 or whatever I paid above my collateral, but then I could still make 260, and now I'm not liable for that. So that would be a rollover, but I would be taking a loss and sacrificing profits, but I would be protecting myself. So unfortunately, I'm still in that play, so we will see how that plays out. But watching the video, they're going to be interesting, and just in general, all the chip makers, Qualcomm really had a move today, but everything, I remember I got that XLNX, they've ripped, everything went crazy on the chip maker side. So remember, they got beaten down some of this China news and everything going on, so watch out for them. And then Facebook, watch the social media stocks. Again, I still have my eye on Twitter. Those plays have gotten crushed now. You could get them cheaper than what I paid. So we should have just took profits on those. And you're seeing this marketplace with some of these swing trades. We're hitting some of these plays, and then the value is just getting really, really crushed. You're not seeing the same follow-throughs as you were seeing a few months ago. So keep that in mind. But then next, Crowd, they had earnings. Again, any continuation, any IPOs, Chewy, Spotify, all that, I really, really like them. And then Microsoft, we said that. And then finally, where was it? GLD. I want to watch them. They dropped today. I looked at the premiums today. I didn't really like it too much, but I'm just going to keep my eye on them. Again, if anything, this is going to be my go-to if I wanted to play any of the trifecta to average down on any of those. I'm going to go for GLD, but just not quite yet. Again, I want it to be favorable, but if things move slow, GLD is not your friend. So GLD only is if things pop off or fear changes or something changes big. So watch out for that. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to understand your uniqueness, baby. baby. Specialize. Focus on it. Balance the budget, baby. What comes in, what comes out, what do you do? How do you treat people? How do you treat yourself? How do you treat your money, babies? How do you treat the account? How do you treat the YOLO demon? I hope you're ready, baby. A lot of exciting things. This is just the halfway mark. It is still game time, baby. So the code loves you. I love you. I'm going to see you in the morning. Let's go.